I never imagined that someday I will be making a video on how not to use RSI. After all, Relative Strength Index is one of my favorite indicators and one that I use most often. Here are the results from backtesting a popular RSI strategy over a period of 2 years on Nvidia stock. I then used a revised strategy by fixing a common flaw in the use of RSI. And this strategy turned out to be quite effective. Here are the results from this strategy when I used it on Apple stock. This video is about this strategy, but it's important to first understand what went wrong. Let's turn back time and quickly analyze this. RSI is a momentum oscillator which is commonly rooted for its ability to identify mean reversal. With two important thresholds, which is when RSI is 70, it's considered to be overbought, whereas when it is at the level of 30, it's considered to be oversold. And common wisdom suggests that whenever we see either of them, we should be getting ready for an upcoming reversal. I decided to test this logic by creating a strategy where I will take a long position every time the stock is oversold, close this position when the stock is overbought, which is the level of 30 and 70. And similarly, I will take a short position every time the stock is overbought and close this position when the stock is oversold. What happened next completely shocked me. I immediately turned back to see what exactly went wrong. And this is when I realized what made sense on the RSI chart, which is as I looked on the chart itself, I could easily point out the oversold and overbought regions. But when I looked at the price chart, it just did not tie up. Which is while you are getting the oversold signal on RSI, the price just continues to make high and high. Let's zoom out and let me try to explain what I think went wrong. Here are all the points when RSI signaled an overbought position. Just focus on the corresponding points on the price chart. As per the strategy which I was testing, every time the RSI showed overbought, I tried to take a short position, waiting for that reversal to happen. And just look at the channel the price created during this time. I just didn't find that oversold condition where I could have closed my positions. And similarly, here is the example of the phase where the price continued to show oversold condition and I continued to take the long position. However, the reversal did not happen and the price continued to decline. And just look at all the loss that I made during this process. While the threshold levels of 70 and 30 as overbought and oversold may be correct, the assumption that they lead to mean reversal is something which is not right. And these thresholds can be taken as a sign of current market sentiment, one that may continue under the right conditions. This brings us to a very important point in our journey where we understand what exactly is RSI. So RSI is a popular momentum oscillator. It basically works on recent price data. So it doesn't take a long-term price data into account. It only works on recent price data. And it's not an indicator of overall market and how the stock is moving, but it is an indication of the recent price momentum. And therefore, we can say that when it hits a particular point, it is representing that how rapidly has the momentum shifted in this direction in the recent period. Or what I understand is that it's not the end of a trend, but a point that the trend is now getting momentum and there is a possibility that this trend may continue. I think this is a really important point to understand, that it actually tells the trend may continue. Here is our revised strategy to be used for RSI. There are three key components. First, we will go against the common wisdom on RSI. So we will not use it for trend reversal. Secondly, we will take trend confirmation. And finally, we will trade when we see a pullback. Let's go in detail of each of these steps. Our first step will cover how do we use RSI as an indicator. We will not use RSI as commonly suggested, which is to predict trend reversal. I know this will be hard to let go because this is a very famous concept, but we will not assume that every time the RSI hits an overbought condition, price will make a reversal. We will just not assume that. So instead, we will use in RSI as an indicator of market sentiment. For example, if the RSI is showing an overbought condition, we will think that this is due to the rapid market momentum or increase in price, which indicates an overall underlying bullish sentiment and the one that may continue. The second step of our strategy is to get trend confirmation. This is because RSI is more effective in the direction of the trend. And this is true for most technical indicators. While you can use any indicator of your choice for trend confirmation, I generally prefer 50 period EMA. However, this is dependent on the choice of time frame. What is important for us is that the price should continue to move in the direction of the trend. And now the final step, which is to wait for the pullback. We will first find the point at which the RSI first hit 30. This will indicate the oversold condition. Now we will find the pullback and then we will only trade when the RSI is in the direction of the price. But it's really important to remember that it has to be with trend confirmation, which is the price and the pullback should continue in the same direction of the trend and should be confirmed with whatever trend confirmation indicator is being used. Now let's look at a couple of examples just to explain how our logic works. In our first example, let's first look at the point where the RSI showed an oversold condition. Now when we look at the corresponding point on a price chart and then allow the price to take a pullback, beyond that, as the price continues to show movement in the direction of trend, we could have opened a short position in this case and taken this much profit. Now looking at our second example. In this case, let's first identify the point where the price shows an oversold condition. And in a similar way, as the price continues, post a pullback, a short position could have been taken. With this, I hope you found this video useful. Please take a moment to read this statement and leave a comment if you want more videos like this.